I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Watson, editor of WallStreetWindow.com. Welcome back to the show, Mike, and Happy New Year.
Oh, thank you. Yeah, it's been about 2 weeks since we talked, and it's fun to start the new year. It's one of my favorite times of year because I typically take a break between Christmas and for a week or so and just try to figure out what's going to be the big thing in the markets for the following year, what's going on with the trends, and use it as a time to plan and map out what I want to do.
And so far this year, what's that map look like?
Well, really, for me, it's not too much different than it has been for the past 90 days or so. We saw, I believe, significant changes in the financial markets beginning in October. In the U.S. stock market broke down, but what is interesting as far as trying to make money is gold broke away from the U.S. stock market average, and there's a cycle to the commodity markets where gold tends to begin new bull markets first, and then soft commodities, agriculture commodities follow, and oil and energy is usually a year later. And I think this pattern is actually starting to play out. We saw gold go up last year, and many of the mining stocks popped too. The big cap miners were leading, but now we're actually starting to see some action in the smaller junior mining stocks. For example, yesterday there's a stock, Wallbridge Mining. It went up like over 20%. I have a position in it at the moment, but yeah, I'm just using it as an example. There's other stocks moving too. But what's actually even more interesting to me is we're now starting to see the agriculture commodities get a lift also. Yesterday, the price of sugar, for example, went up 6%. And I'm starting personally to play some of these agriculture commodities, exchange traded funds for them. Some people use futures, but I use exchange traded funds. But regardless, it's also a powerful confirmation that the gold and silver moves are real, because this is usually what happens. The gold and silver go up first, then these other commodities start to move. So I think that's really what we're starting to see. And I believe, as far as buying things and going long, that these are going to be the most profitable opportunities in 2019. Now, I know in the United States, all people want to hear about is buying Facebook, buying Apple. All they talk about on CNBC. There's a complete obsession with these stocks, and really they're lagging the market averages. Apple, for example, it's actually barely bouncing in the past week, even if the stock market going up. NVIDIA has been the worst performing stock in the entire S&P 500. But in the United States, this is all people are obsessed with. That's why it's kind of I feel kind of lucky to talk with you and your listeners up in Canada, because they're a little more sophisticated and know that there's more to the world than just these bad stocks. And I repeat this because I hope there are people in the United States that listen and can see that it's fun when stocks bounce, but we're looking at real breakouts out of consolidations in other areas, such as some of these mining stocks and some of these soft commodities.
So if you're trying to rebalance your portfolio, the FANGs are just not the place to be.
No, I really don't think so. And to give an example, I've been doing this for a long time, and in 1999, Cisco was a must-own stock. is the most widely and popularly owned stock back then. It had incredible earnings growth, and it was said it was involved in the internet and networking and all this stuff. So everyone had to own it, and it did incredible for years. But then after 2000, when the stock market topped out, Cisco actually lagged the market for over a decade. And gold and silver outperformed the stock market for a decade. It went up more than the Dow and the S&P 500 did. And I think a stock like Apple is very similar to Cisco back in 2000, because Apple has been the must-own stock. Everyone has to own Apple. Everyone has to have it. And I've opened up a small account at Robinhood a couple months ago. It's a brokerage house in the United States. And they show you the most owned stocks. They have a list of 100, and Apple is number one. Meanwhile, there's a ETF, DBA, which I do own, but it's for agriculture commodities, and less than 250 people on Robinhood even own it. And it's it's just the contrast. But I think Apple is like Cisco in 2000, in which everyone owns it. It's talked about everywhere. But I think it's going to lag the stock market, even if the market bottomed last week or whatever, which I doubt, but for good. But it doesn't matter. It's going to just lag and lag and lag because everyone owns it, and the story has shifted. It's had several disappointing earnings reports. It just downgraded its earnings 2 months ago. It had to announce that it would no longer report how many iPhone units it was selling, how many other units for the phones it was selling, and people said, ignore that. It doesn't mean anything, and then it turned out it does, because they had to downgrade their earnings. And when you see a giant stock that everyone owns, and then this sort of stuff happens, and then that stock lags the market, you've got to avoid it. Generally speaking, I know a lot of people disagree. I believe we're in a bear market. Most people don't, but it doesn't matter. Everyone can agree that, generally speaking, you want to own what is performing better than the stock market averages and avoid what is performing worse. Apple's performing worse. Nvidia's performing worse. So's Facebook. And if you're bullish on the stock market, forget about those stocks and look for what is doing better, what is outperforming, and it's really the mining stocks, and other actually defensive sectors are doing better too. Utility stocks, for the most part, are doing better than the market averages. And these cycles shift. Some sectors come in favor, out of favor, and so forth. And it's good because it creates opportunities for people to get early in on something. Instead of just say, well, I'm going to buy this thing that's been going up for 5 years or something. And in agriculture commodities have been in a bear market since 2012. Gold had a horrible bear market. I think it bottomed in 2016, but it hasn't gone up enough to capture people's attention. And the mining stocks, it's still pretty much been locked in a base for 2 years. So I think, it's very early in the cycle for those things, and that just provides wonderful opportunities. Like I mentioned this stock, and I'm just using it as an example, this Walbridge thing. Walbridge was over 30 cents in the summer, and now it's 19 cents. And that's how the junior mining stocks basically look across the board. You have junior mining stocks that really have not gone up a lot over the past 3 months. And if they just go back up to where they were 2 years ago, it'd be a huge gain in them. And I think they're, for the most part, almost all of them are likely to do that. So there's opportunities throughout the space. And I know you interview people that are actually more knowledgeable than I am about individual mining stocks. People can go to HoweStreet.com and see many of them. And I say that because hopefully some Americans will go to the website and see what's going on there, because I really think this is where the opportunity is this year.
We'll have more with Mike Swanson right after this.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Mike Swanson. Mike, while the big board has been getting all the attention, what about the Russell 2000? How's it been doing?
Well, it of course had a tremendous drop from September to December. It fell from 100. The IWM ETF that tracks it fell from about 172.5 to below 125. It's a pretty tremendous drop. And it is bouncing since the day after Christmas, just like everything in the U.S. stock market is bouncing. But I believe that it's, and along with the other indices, is going to run into trouble or resistance this month soon, and basically probably go sideways and start to roll over again. So I really think the upside gains have basically been made. And the best case scenario for the Russell 2000 is that it goes sideways for months, and it did that last year from February to May, and builds a base, and then breaks out of a nice base to do well after that. That's the best case scenario, though, and I think it's just as easily to form a top over the rest of January and then roll over. So that's something I've personally am avoiding. I know a lot of people see it up and they want to buy it, but if you want to buy anything in the market, you kind of have to have a strategy of where you're going to get out. Are you going to put a stop loss order? How much do you think you can make? And when it comes to asking questions like that, at the moment, the chart patterns are much more constructive elsewhere. In the gold and silver and agriculture commodities and so forth that I mentioned. And there'll be other things that line up over the course of the year. But right now, we're seeing a bounce in the stock market, and the Russell 2000 is bouncing harder than the S&P, but it fell worse than the S&P. It's simply a more volatile index. And if someone has a tactic to day trade it, I don't, but there's people who do. That's good for them. But as far as investing in it, I would really, wait and see if this thing can consolidate and demonstrate that this isn't simply a bounce, and this is more of a real bottoming process. And that's something that would take several months, to figure out. So as we're doing this interview, I think, yeah, we've had the bounce in the stock market. Let's see if it's real. I don't think it is, but let's see. But the breakouts out of consolidations, those patterns trigger rallies that last for months typically, and they're actually happening in some individual mining stocks and in some of the commodities. And I think as we're speaking, that's the place to initiate new long positions. And I'll tell you something that makes people here very angry at times. I'm planning on really shorting lots of stocks in the United States again. I did that in the fall, and but I'm watching at the moment. I don't think today's the day to do it, but that's where I think this thing's heading.
We'll have more with Mike Swanson right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, President Trump said trade talks with China are going very well. Is that something that the stock market is watching?
I don't know if it should, because he says stuff all the time. But I actually think that people may be making too big of a deal out of that news item as far as it goes with the U.S. stock market, the trade news, good or bad. Because ultimately, I think the market is sort of like a slow-moving battleship. When it turns in one direction, it tends to stay in that direction. So when you're having a bounce, the news, good or bad, doesn't really matter till the bounce is over, and then you go down, and then it doesn't matter again. So I think it's the overall trend that matters, but if I had to guess, I would guess that in March, when we're supposed to have, we're having a pause in the trade controversy, and they're supposed to something is supposed to happen in March, I would assume that it's going to be something similar to what happened in December, meaning that there's not going to be a real deal that is takes the entire issue away, but there probably will be a kick the can down the road event. But it may be dictated by the financial markets. If the stock market is going up, the bounce is still happening, then it's more likely that Trump will put those tariffs on and really be mean and aggressive to China, as he threatened to do but did not do. However, the stock market is dropping into March, then maybe the kick the can down the road will be even more likely to happen. But there are people in the Trump administration, they're having demands of China, not simply to lower their trade deficit with the United States, but to change their entire industrial policy, to stop government and state investment in technology, and kind of surrender some of their sovereignty to the United States by doing so. And I don't think China is going to agree to that. I think the demands are impossible for them to meet. And there's actually a rise now of nationalism in China. If you or the listener types China Google, or goes to Google and types China Apple iPhones, they can find there's boycotts going on. So the Chinese government is now getting more powerful and more popular with its own people through this controversy, whereas that's really not happening in the United States. The United States, Trump is maintaining his core base of support, but the trade deals aren't really popular with the rest of the population. So it's going to be an interesting time for sure when March comes around to see what happens, and it will be some drama, some television, no doubt.
And Trump still has tariffs on Canadian steel and aluminum. That must be making the cost of construction in the U.S. much higher.
It's making it tick up, but it's also, I think, a sign of how, crazy the whole thing may be, because it's very difficult, I believe, for the United States to wage an economic war with China, which is now the second largest economy in the world, and at the same time make our allies such as Canada and countries in Europe angry over these same similar type issues. Instead, you would think it would make more sense to create a coalition of against China with Canada, with Europe, and so forth, and try to team up. That's really, in fact, what the United States did after World War II. We created the country created a global coalition against the Soviet Union, and we won the Cold War ultimately. And you would think if China is supposed to become this enemy nation, I don't really believe it's an enemy nation, but there are people inside Trump's administration who pretty much believe that. Steve Bannon even has said we're going to have a war of China one day. He was Trump's top political advisor and still speaks of Trump. Well, if these people really believe that China is enemy number one, or competitor number one, then you would think they would be making allies and friends to create a coalition against China. Instead, it's just complete, total chaos. And really, in this chaos, though, it goes beyond Donald Trump. In the United States, there's a lot of people, frankly, who worship Donald Trump, who think there's an invisible war of Trump, some conspiracy, and it's just a story, and they're really addicted to hearing about it. But the real story, I believe, is that in the United States, we're having a political dysfunction, and that's why Trump even won. And it's kind of the fallout, the legacy of the 2008 financial crash. There's lots of hardship in the United States. People have not still recovered, for the most part, from that, and living standards in much of the counties that elected or voted for Trump over Clinton were hit the hardest. There's a rise of opiate addiction and all kinds of things, we could point to and talk about. But the bottom line is not, I think, a story of Donald Trump changing things necessarily or in an invisible war with a conspiracy, but a symptom of political dysfunction in the United States. And in the financial markets have not reflected that really, because they've been going up since 2009. The Federal Reserve did quantitative easing, kept interest rates at zero, and then when Trump won, we had an acceleration of the rally with the tax cuts. But all these things have also contributed to a rapid rise in the national debt, and now this year we're poised for a $1 trillion deficit. The government spending went up by 50%. The federal government spending went up by 50% in the last 3 quarters of last year, while the tax revenue only went up 3%. And this, I say, is a sign of the political dysfunction. And at some point, and it's not happening today, but I think probably before the year is over in the second half, it's going to start to show up in the financial markets. And we probably just got a whiff of that in December, but now we're in kind of a lull, in a quiet period. And the news may look crazy and somewhat be, but it's not showing up now yet in the financial markets. But the ultimate hedge is just another reason for people to buy gold and silver, because ultimately the U.S. dollar is going to be the prime thing that takes the biggest hit over the next couple of years.
Mike, thank you so much for chatting with us.
Oh, great to talk with you. Great. Have a good day.
My guest has been Mike Swanson, editor of WallStreetWindow.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. Questions for Mike or our other guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.